Capital assets. This section explains how capital assets are treated under the UAE VAT system, particularly in relation to VAT registration thresholds. It highlights the definition of capital assets, their exclusion from turnover calculations, and the reasoning behind this exclusion. This special treatment ensures that VAT registration requirements focus on regular business activities, rather than extraordinary or one-off sales of business property. 1. What are capital assets? Definition. Capital assets refer to long-term assets that a business acquires and uses over an extended period to help generate income. These are not intended for resale in the ordinary course of business but instead form part of the infrastructure or equipment needed to operate the business. Examples of capital assets. Common examples of capital assets in different industries include machinery and equipment, manufacturing machines, production lines, specialized tools, vehicles, company-owned delivery trucks, fleet cars used by staff, buildings and real estate, office buildings, warehouse, factories, infrastructure investments, IT systems, specialized software platforms, in some cases if capitalized, large-scale installations like production plants or storage tanks. Key features of capital assets. Used for long-term purposes, more than one tax period. Not intended for quick resale. Contribute to the income-generating activities of the business. Depreciated or amortized over time, accounting perspective. 2. Exclusion of capital assets from VAT registration threshold calculation. Explanation. When determining whether a business exceeds the mandatory registration threshold, AED 375,000, or the voluntary registration threshold, AED 187,500, under UAEVAT law, the value of any supply, sale or disposal of capital assets is excluded from the turnover calculation. What this means in practice. If a business sells regular goods or services as part of its daily operations, that revenue counts toward the registration threshold. However, if the business sells a capital asset, like an old company vehicle or office building, the revenue from that sale does not count toward the threshold calculation. Example. A company providing IT consultancy sells one of its office buildings for AED 2 million. This AED 2 million from the sale of the building will not count toward the taxable turnover for registration purposes because the building is a capital asset. Reason for exclusion. Capital assets are not part of the ordinary course of business. They are long-term investments used to operate the business, not items held for regular sale. VAT registration is intended to capture ongoing business activity, not occasional disposal of assets. 3. Why are capital assets excluded from registration threshold? Explanation. The VAT system is designed to tax regular revenue-generating activities that form the core business operations of a company. This ensures VAT registration focuses on the business's actual economic activity. Specific reasons. Focus on operational turnover. Registration thresholds are intended to assess whether a business is actively participating in taxable economic activity, not whether it had a one-off large sale. Prevent accidental registration. A business could be forced into VAT registration if the sale of a large asset temporarily pushed its revenue above the threshold. This would create unnecessary administrative burdens, especially for businesses that do not regularly trade taxable goods or services. Consistency across sectors. For industries where large assets, like equipment or buildings, change hands occasionally, excluding such transactions ensures fair treatment compared to service-based businesses that rarely have such disposals. Real-world impact. Businesses selling assets like buildings, machinery, or vehicles do not need to worry that such transactions will trigger VAT registration. This provides certainty and clarity for businesses managing their tax obligations. 4. Practical example. Example scenario. Company profile. A company offers financial consultancy services. Capital asset disposal. The company owns a commercial office building, which it sells for AED 1.5 million. VAT impact. This AED 1.5 million will not be counted toward the company's turnover for VAT registration threshold calculation. However, all the revenue earned from the company's consulting services, its main business activity, will count toward the threshold. For more details, contact us.